The purpose of this video is to tell you about the 7 different styles of mortgages that I can write. All right, so there's commercial loans, right? I'm going to talk about this one first because it's quick. All right, commercial loans, I can do single family homes all the way to airports, hotels, motels. I hope the song is stuck in your head now. Think businesses, right? That's a commercial loan. Now let's talk residential. There's your conventional loan. This is usually, I like to look at 620, 700 credit score plus style loans, and the minimum down payment is 3%. All right. There are reasons why you would need 5% down or 20% down, 15% down, right? But minimum down payment is 3. Then there's FHA loan. This is usually for lower credit scores, so I can go all the way down to 500. But then you need to do 10% down for this one. Once you hit 580, now you can do 3.5% down at a minimum down payment. There's other rules and regulations that go to it. Or if you have a higher debt limit and you want to afford a little bit more, possibly an FHA loan might be right for you. Then there's a USDA loan. So if you're here in Minnesota, think the Twin Cities or the outside ring of the Twin Cities and out into Wisconsin. If you think Hudson, those areas do not work, but outside of that, where they're rural, those areas work. And there's a map on there online. Just get in touch with me and I can show you exactly what works and what does not. But USDA loan is going to allow for a 0% down, which is awesome for the right client. Then there's a VA loan. So this is a veteran loan. So you need to be, you would need to have served in the military, either in the National Guard for some time frame or active duty for some time frame. If you have VA disability, either at 0% all the way up to 100%, then you get to remove that VA funding fee. And that VA funding fee is going to depend on your down payment, and if this was your first time using it or your second time using it, if you do not have VA disability. So if you're a single person or you are married, you can use this loan with 0% down. But if you are engaged to somebody, you can still use them and put them on the loan, but now we need to look at putting a down payment on it. Don't blame the messenger. It's the way the VA loan works. So those are your 4 basic ones, and then there's your jumbo loan, which is a loan of $750,000 as of 2024 and more. We're going to need 20, 25, 30% down, depending on the overall loan amount. And then there's your non-qualified mortgage, and this part's going to be a little bit longer, so I apologize, but this is the weird scenarios that are out there. Okay, we have loans where we don't look at your income, where we remove that and we look at the potential income of the property, if it's going to be an income producing property as an investment property. You're buying a quadplex, which is 4 homes, and we're going to look at what income that produces rather than what you produce to fund the loan. We have loans where it's a fix and flip, where it's going to cost $300,000 to do a renovation on the home, $300,000 for the home. We give you a certain percentage, then you get to go hire people to go get the work done, and we want to get you out of that loan and refinance that property at a certain point. We have bank statement loans. This is my favorite style loan for those clients who are self-employed, or they have multiple streams of income coming in and some of it's just cash, right? Or you're a cash-only employee, you make really good money, but you can't show a pay stub, or you don't show a pay stub that shows what kind of money we are using. A bank statement loan is perfect for that. Or if you're a business owner and you take the opportunity to have a bunch of write-offs. So let's just say you make $200,000 in your business and you have $150,000 worth of write-offs for the year because you pay for miscellaneous things from the business. Technically, you only made $50,000 for that year. It's really hard to get approved for $1 million home with that, and that's where a bank statement loan may come into effect for you. There's also asset depletion. Let's say you don't have a job, or you've got a trust and it's got millions of dollars in there, or hundreds of thousands of dollars in there. I can use that money as income instead of your job. So if you have like a weird situation with your income or normal income and you want to know, hey, Marcus, what would I be doing? This would be a really good opportunity to reach out to me, and I can walk you through exactly what options we have here for you.